Tom, this is a pleasure. I'm really happy that you accepted to come here. It's a true honor.
Well, people don't know it, but last time I saw you, I was interviewing you. I had you come and speak to our board of directors. So
now it's giving back, basically.
Yeah, exactly.
Paying back. That's good. That's good. Now it's paying. Now, yeah, it was definitely a pleasure to speak to the board of directors. Yeah. I would say that. Very insightful things. So maybe we should start a little bit about what is happening in like what is your view on banks and cryptocurrencies? There's been a lot of things like over the last many years, and this morning I basically started out looking back at the last Links conference, where the only thing I was focused on back then was like, how do we get the banks involved into crypto? Yeah. It's very important for them, for their roadmaps and so on. And now this year I've seen a lot of like banks entering, a lot of things are happening there. I presented for your board, as you mentioned, so a lot of things are definitely happening there. What is your view on like the role of banks in this crypto craze that's happening right now?
Well, I think about this a lot because there's so much going on. How will banks participate? You know, how will the government want banks to participate? How will regulators around the world want us to participate? How much does the industry want us to participate? I think at some point we will participate in a number of ways, not just on digital currencies, but the technology around it, how the technology around it can help us do things. And I like telling one story because, you know, our bank's 230 years old. So there's been a lot of new things over the last 230 years. How old is your company? 3 years, 4 years, 5?
Oh, it'll be actually 7 years.
7,
yeah,
like,
but
so,
still, yeah.
Yeah, so we're 40 times older than you are. And you can imagine what it was like 230 years ago. I mean, it was very different. But I tell the story about it in the 1950s when Bank of America was I think the world's biggest bank in 1950, just in California. And at that time, checking accounts were all the rage. And so checking accounts, we were opening 25,000 checking accounts a month. But every checking account was made by your name. There wasn't a number. Your account wasn't a number. You would have one. And so a person had to go in and make sure that was you when it came in. And if you put a check over here, but your signature was at this branch. And so we had to close branches at 2 o'clock to try to process all the checks that were happening because there were so many checks. And they were growing faster than our system. And so literally in 1950, the bank went to what was then called the Stanford Research Institute, now called SRI. Said, we can't do it. We got to figure out a way to do it. So we actually invented something. And so over the next 5 years with SRI, they invented 2 things. One is the bottom of everybody's check, there's a code. That font was invented because it was easy to read. And it was something and that code was invented. They looked at optical character recognition, which just come up. But if you wrote over it, you couldn't really do it. And if you couldn't read the numbers, you couldn't see it. So that's where the magnetic MICR came up from us doing that. And we invented that code in that machine. And then we had to build the machines. And the first machines we built had 1 million miles and it was all vacuum tubes before transistors. We actually went to General Electric to build the machines back when they had computing. And they made 35 machines for us. Each machine weighed 25 tons. But it allowed us to process where it would be 400 accounts an hour. It was 33,000 checks an hour. And so what did that do? It meant that we became the biggest bank in the world because we could do something that nobody else could do. 1. 2, the error rate went way down, as you can imagine. Right? Yeah. So you could process that. And 3, the ability to do that allowed us to invent the credit card, the first credit card, Bank America card. And that was because we had the ability to process so much so fast. And so that was the first card that not only went to multiple retailers, but actually had credit on it. There'd never been that card before. And it was all because of the technological advancement that happened. Now, so I tell that story because I believe some of the things that are happening today will provide that technological jump that allows banks to be more efficient, less errors, be more compliant, and all the things that are going to happen in the world. So we look forward to figuring out a way to use it best and to have it be part of the system.
Awesome. No, I can only share that, and I do think there's a lot of opportunities in cryptos for the banking industry. What do you think will be the first endeavor into the crypto world from banks? And maybe I should start asking. There's definitely been interest in blockchain for a while in bank, and what was the driver for that technological interest and drive in the banks there?
Well, I think one is again is reducing operational risk is a big problem for banks. I mean, it's an issue for banks and the regulators, and we keep capital just for something called operational risk. And so the ability to have more certainty and less errors on anything and more efficient is a good thing for us. So if this is better and more secure and all that, then it will be a good thing for banks to do. We still process, as big as PayPal and things like that are, the number of, our size is enormous. You can imagine how big we are and how much we process in credit cards and mobile and ATMs and everything. We have $2 trillion in deposits now. So those kind of things can be really valuable to us if they reduce those expenses and costs and error rates. And so if there's a chance for that to happen, and I think there is, then it would be great for us.
Cool. So I would look at it this way, and also I know you from other situations as well. I've always seen you as very interested in financial innovation and in technology. And basically what you're saying here is basically saying the credit cards invented here, you have blockchain, it's interesting because it can lower the fees, and now crypto is clearly interested because there's a lot of new use cases that could be there. Yeah. Are there, have you dipped your toes in any of the crypto things today? Or there things that, whether you are talking on behalf of BFA or whether you're looking at it as Tom Montag and say, I think this is cool, this is something that I would like to push, whether it's internally in the bank or whether into something else?
Well, the one thing I was thinking about, I was talking the other day to somebody about this, and this reminds me of when derivatives first started. So I was on the ISDA when it first started, board at one time, and it was brand new, and people didn't understand it. It was all bilateral, and what are these things, and what do they represent, and how do we make these instruments part of the mainstream? What do you want to do? People, even today, people are scared of derivatives. As it speaks right now, even today. And part of that was to put procedures and processes and language and contracts and all those things that the industry adopted. The ISDA became then netting agreements and all those things. Now, we were doing all those things, those were more by hand, and then eventually the computer caught up with derivatives and took over. But I look at it the same way, you're developing an industry and a way to look at things and something that everybody can adopt as a way to do things. So I do think we've done things like this before, and we need to be part of I don't know, that's not a solution really, but part. And also, a lot of the things we use to move money are old, and they've been around a long time. And I think everybody's been looking at more efficient and better ways to kind of move things around the world.
What is your thoughts around? I'm just thinking about you've seen various companies in the industry and protocols offering loans, and loans have been to me always something that's loan is something you get in a bank. Yeah. Have you seen, and also the interest that they provided for deposits accounts in some of things it's 8%, or it's even more, and the loans are relatively high percentages. But how do you see you playing in that space, and if you would that look different?
I can see a scenario in which we could play in that space, but I do think there's certain things that probably need to happen before we're actually playing in that space. I mean, listen, we loan against many things. We loan against art. We loan against, obviously, houses. We loan against lots of boats, railroad cars, all sorts of things in the world. We lease, drilling equipment. So we're involved in lots of things. And so at some point, I assume if there's stability and less volatility and what margins you need to even now, you've seen people, even in stocks, people can lose a lot of money lending money against stocks. And it just happened, as you know, a few months ago when a number of people lost a lot of money lending against a stock. So you can see why people get nervous about what exactly they're lending against and how do they make sure they have it, and the custody of the asset, wherever that asset is. That's always a big deal. I think when Bank of New York Mellon announced that they were looking at being a custodian, because they're a custodian for many of the banks. So.
Cool. So let's imagine, so now we're approaching Thanksgiving, and you're off for a few days, and you come back into the bank, and someone took over the weekend, and they suddenly launched a lot of crypto products into the bank, and suddenly Bank of America has all of the products you can imagine, even selling NFTs. Yeah. When you arrive on Monday in the beginning of December, be what would be your biggest fear? What is the biggest risk in offering crypto products?
The Fed and the OCC calling me. For sure. I mean,
they would do that.
I mean, what are you guys doing?
Yeah.
And of course, I don't know because I was at Thanksgiving.
You were
and
Thanksgiving,
I came back
right?
and
Yeah,
like,
that was the thing, yeah.
apparently somebody else's Thanksgiving was different than mine. No, but the process and the procedures and that you really have buttoned down process and procedures to be able to do what we have to do, which same thing with money, by the way, the money that we move and how we move it around the world and the currencies that we keep. Even if we keep a new currency, you can't, like we saw it when the euro came out or something.
Yeah.
How much time was spent making sure all your systems work for that new currency. Even now, just moving from LIBOR to SOFR, you can imagine how much work's been done just on changing an index, changing a curve in the bank. So if you came in and all of a sudden there were many crypto products, it wouldn't never happen that way, but you would be scared that your processes and procedures were not robust enough to be able to do the standards by which we have to run the bank.
And it's definitely not happening over Thanksgiving.
Yeah.
That's for sure.
Not this one.
No, not this one. Not this one. Yeah. Cool. So I also want to dive into like a couple of other crypto instruments that also we mentioned earlier today. One of them being stable coins. Yeah. And like, what is your view on stable coins in general? Also?
I don't really have a strong view. I mean,
no.
If I probably don't understand them as well as everyone in the room, but if it's just a coin that represents I have $1 and I'm going to move it for you, but if you remember, Argentina used to base their currency on having $1, and bad things somehow happened even when that was based on having $1. And so you're just always nervous that, is there really $1 there behind the stable coin? I mean, maybe that's the bottom line of that. Yeah. And so if you knew it, if it was the Fed had a stable coin, you'd be pretty comfortable. If someone else had a stable coin, you'd be less comfortable. Yeah. So, I mean, I can see how it can be a good thing, even for securities, how securities get processed and all these things, the amount of liquidity we need to keep for just having things taking 1 day or 2 days, or in case that doesn't happen, is enormous. Anything that lowers the amount of liquidity and noise is good for banks and the system. It just releases a lot of capital and liquidity back into the market, just like operational risk. So anything we can do, if it's stable and it's better and people feel comfortable with, it would be good for the economy, banks, everybody. But that's what I would be worried about. Is it really a stable coin?
Is it backed? Is it actually backed?
Yeah.
And you mentioned, like, you kind of said if the Fed issued a stable coin, then we are moving into CBDCs. Yeah. So that is like, that's definitely being discussed a lot. It's being discussed by many countries. I hear it being discussed here in the US as well. What is your view? Have you had any of those conversations? What are the?
I haven't had any of the conversations, but my view is it's inevitable in some way, shape, or form, and it'll be fine. It'll be good. I mean, the system will handle it well, and most of what we do, as you can imagine, is digital now. I mean, the amount of cash that people use is very small. I was trying to get the statistics on check writing versus mobile. Like, the number of transactions are huge mobile, but still a fairly large volume. So not numbers, but the actual dollar amount of checks are written every month in the United States. Yes. Because people pay their big bill, like to pay their big bills by check. Yeah. And there's lots of people that still really can't accept money. That's the way they want to actually get it still. As much as you don't think it's that way, there's many places that are like that still. So I do think it's inevitable, and it'll be good.
So I actually signed my first check in the US in my life. That was here.
Really?
Yeah, and I'm more than 50, right? So it's just saying that it's like, I should have done it in Denmark at some point, but like, it was literally here where I realized that I need a checking account. I was not used to that. So
I still get nervous taking a picture of a check in my own bank and saying, I hope this shows up in my account.
That was like.
I mean, I still haven't gotten over my, And my father was 90 years old. I mean,
Yeah.
He doesn't even want to call. He doesn't want to use the phone to do banking. There's just an element of people that really don't trust. They're computer literate. They don't trust it. Whatever, and it takes a while.
So it's another angle to like approach all of crypto and financial innovation in general. So there's clearly, we are techies, we see the crypto industry being super exciting and so on, but it's also like laser focused at crypto from that angle. But if you run a bank that's huge, you have a lot of customers and so on, and when you look at that customer group, you can approach it from a completely other point of view. You don't care about the technology. You would say, like, what is the next step that my customer base is kind of looking for? Yeah. What are they looking for? What is the next step to take here? How do you look at that today? Like, what is the Bank of America focus? Where do we need to go?
Right. Well, I mean, there's a lot of different opinions about where we need to go and how long it'll take and what form it will take.
Yeah.
I mean, we're certainly aware of, wallets like Venmo or Square or, Robinhood and what's going on in that space and what's going on in crypto. We have the largest wealth management business in the world, I think. We have $3 trillion of assets under management. So we're taking responsibility about what we need to do and what we should offer to our clients and how we should do it. And so, we're always looking at it. So I don't know right now when the futures went on, the thing that we do now basically is that we do have research on crypto now, and we also do, because it's on the exchange, we do facilitate transactions on, because it settles in dollars, quite frankly.
Yeah.
The Bitcoin futures, and now the ETF has come out. So we're involved in those things at this time.
That makes sense.
Yeah.
Cool. So just like on the crypto interest side from the bank, I would dive into when you look at various stages that we've seen banks approach crypto, and you say like, well, there's settlement there. You see there's also been stories over the last couple of years that banks would block transactions into crypto exchanges and be very nefarious in the approach and so on. You obviously seen it from the other side, and there are a lot of rumors in the industry about those things. What have been your thought around like what you have seen and read and like all of that there?
I just call you when I want to know what we've seen. Like, I think it's a huge part of what banks do is the know your customer anti-money laundering. It's such you can't imagine how much focus and amount of effort goes into that. And so you can imagine, long before crypto came along, we were monitoring payments that went in and out of all sorts of branches all over the world. Where did this come from? What's the consistency? What's the amount? Patterns and the deposits patterns and people taking it out. How are people, I mean, in many things that we do, we are looking for patterns, looking for something going on, and that's no different. And so we have to be comfortable with what is happening in those flows all the time. And if we're not comfortable, we don't understand, it's our obligation to understand those things. If we can't understand it well enough, we're not going to do it. And so that's why we look at everything we do. And by the way, that's not just dollars, that's trading, the way people trade, the way people do anything. So it's not just deposits or loans, and it's not just crypto, but it's anything that we do. And so that's why we look at it. Do we understand it well enough? Can we follow it? Do we know the customer? Do we know all those things?
Cool. So when you now look at the entire crypto industry today, it's clearly it's very global. It has like a lot of these footprints and so on. Do you see like what is kind of the inherent difference between running a bank in a country that's kind of Bank of America is here, and then this global community where you can basically reach everyone in the world? It's like it's just like there's oftentimes this comparison between banks and crypto as being like two sides of the same coin or in competition. Yeah. What is your view on that view? Is that true or not true, or like how do you see it?
No, I don't think we view it as I don't view it as competition at all. I view it as just another asset class, another thing that people are interested in, has value, and people like it for all sorts of different reasons. I've on the Bitcoin front, I came around to the view that this could really have value, and understood why it would have value to people. Kind of the global store of value concept and the global movement concept. It made sense to me. I think it's harder when you're American to appreciate why you would, because you have a stable currency that's the world's trade currency. So for you, it's like, well, what difference does it really make to me? It probably means less difference to Americans than most people in the world. But I think there's roughly 180 currencies in the world, and I don't know, there's a healthy percentage of those that you probably wouldn't have your money in, and so, but lots of people are in those places. And also for people to move money is expensive across borders and timely. And so I can see why there's an element of people that like it and want to use it, and why that stability, that hope for stability. We don't know, by the way, we don't know how stable it is. Any of the coins are. I can see why there could be a vision where that's very valuable to them. Yeah.
So when you now just wanted to jump back to the story,
but we move money all over the world every day too.
Yes.
I mean, I don't know the exact number. Maybe we move around $1.5 trillion around the world, cross border every single day. And so, we move a lot of money around the world every day that's secure in digital form for clients.
I'm pretty sure it is. Yes. Yeah. Cool. So it's just like.
Well, you say that, but we also are we also move cash back to the U.S. Like we go to around the world and we pick up cash when the government, when they have too much dollar bills and XYZ, they move them back and we bring them to the Fed basically and get credit for it. That's actually a business, by the way, moving cash back as people go and they convert their cash into whatever it is. And
yes.
that's one of our businesses.
It's expensive airplane.
Yeah.
If it crashes.
Yeah.
So.
Yeah. So you can only have $200 million of cash on each airplane, just FYI. That's
200 million?
Well, it's an insurance thing.
That's an insurance thing, yeah, because that could actually be more, I would
No, you can get more in there, but.
Yes, yeah.
The insurance company doesn't want you to have that much money. So I think that's the point.
Yeah, you can definitely transact more in a one Bitcoin transaction than that.
Yeah.
But it's not insured.
Yeah.
So.
Yeah.
So jumping back to the story you told in the beginning about like the machines that were invented and how you do checks and all other things, I would to a large extent say that the crypto industry is doing some of the same things today, like inventing new things and trying new things out. And in that process, there's a lot of like possibilities where this can go wrong. And there's a lot of possibilities of like making the wrong decisions and like it's basically growing something new. And you've been in that process for many years. It's just like, as you mentioned, this is like 200 years or more, like where that is happening. So it's there. So what is your advice to businesses in that process of like creating the machine, the radio tubes, doing stuff, like just in another iteration? Because I agree, it's kind of the same.
I mean, I wasn't there then.
No, I know.
For the record, I was not.
I know that, right, yeah.
FYI. While you were telling that story, thinking back to the 1950s, the other interesting thing about the 50s is that, banks all closed on Sundays. So you couldn't do anything on a Sunday, right? All banks were closed. There was only one bank branch in all of America open on a Sunday, and it was ours at Disneyland. That's the only place you could bank 24/7 was Bank of America branch on Main Street in Disneyland. Just FYI.
That was a magical day.
And that's why it's the happiest place on earth.
Yeah, of course, yeah.
No, I think it's all about getting consistency and process around it. Like this is how it's going to work. These are the rules of the road. This is what, and so we were talking about how you put your good housekeeping seal on a payment. Like the ability to have something that everybody believes, yes, that is a valid rail system, legal document, whatever it is that people can coalesce around to me is very important, which is what derivatives did and fueled its explosive growth, was around consistency and terms and how you did things. And so at some point, I think that's what you kind of need to have to have people accept it in that way. I'm sure you're driving part of that change.
Yeah, so I think that what we're trying to build is very much around, I would say, the understanding of the crypto industry as a whole, right? Understand the risk profiles, understand where the customers get their funds from, but also understand just like the business intelligence side of things that's growing even more. Assessing the risk in various assets is another part of it. So yeah, clearly.
I mean, just the whole, you've probably heard the stats about how much banks spend on cybersecurity. It's an enormous amount of money. And so you can imagine in this space, it's even heightened more because it's new and it's different and there's all sorts of people trying to do things on the system. And so, it's a real focus item for anybody, how it's going to work. I mean, you mentioned you lost some money at Mt. Gox.
I did, full disclosure.
Yeah, I'm sorry.
No, it's good. It's probably out there on the internet anyway, so yeah. Cool. So like if you're looking at general in crypto today, is there any project that you are following, anything that you are like, this is something that's your little baby in the industry or something you are like excited about there?
I don't want to really say who I like and who I don't like, but I think a lot of the things people are doing are very interesting.
Yes.
And have a real probability of changing how we do things in a good way, because again, back to the liquidity point, how much liquidity a bank keeps, even in trading, the way trades settle and how quickly they settle and how they settle and who owns them. And if it's an older process, and it ties up a lot of capital and liquidity that can all be released if it's done a different, not all, but some of it can be released if we do it a different way. And I see a lot of exciting things going on in your space that may allow us to change some of the processes that we use now.
Yes. You also spoke about compliance and compliance in the bank as being a key thing for like a key value for the bank in many ways.
Yeah.
And we've definitely seen an industry over the last like 10 years basically moving and trying to understand what is this compliance things actually, and how do we build out compliant processes for the industry, what are the right things to do, what are the wrong things to do, and so on. And you worked with compliance for a long time. You've seen like this in many ways. What is your advice or thought around like what are the best practices? I wouldn't say the big practices in compliance, but what is like the advice to say how should you deal with this? What should the focus be? What are like your advice to people moving into the money space and building out compliance programs?
Well, first of all, it's just hard. Compliance is hard now because so much is electronic and so fast, and the volumes are so great that you looking at a sea of data it's hard for that to work anymore. So you literally have to have algorithms and things that you're comfortable with, that are finding the things that you want to find, and that you've written them correctly, and also that you're finding all the ways those you have to triangulating between different things and how people could do different ways. And it's the same thing here. And so there's just that element of it. And then back to the KYC AML, I'd love if there was some industry solution because many of us all deal with the same client, but we all are going to that client for the same information in a lot of cases, and we're spending a lot of time and effort on that. Like the combination of customers and the users in this case, and clearing them would be, for the industry would be great. Also for crypto, I think would be great how it would do. And then the sophistication, your company's all about it's hard, right? That's why your company has a lot of value.
Yeah.
And so you can imagine how hard it is for others to do it too. And you have to be able to do it. And if you can't do it, you shouldn't do it. If you can't do the compliance, you shouldn't do the product. And so,
I would agree with that. Yeah, that's right.
Yeah,
and definitely a lot of effort needs to put into to get it right. How has been like over the years? This conference is like, as I mentioned to you, it's like we're a great mixture of public sector and private sector and so on. What has been like your way of working with the public sector over the years from the bank? You said like the first thing that would happen if the magical Thanksgiving weekend would happen is like the call from the Fed.
Well, I've had a lot of experiences with the public sector. I mean, around the world. So
yes.
I mean, just different things. I got to deal with the pay czar after 2008. I got to go to Washington and do those kind of things. But listen, mostly it's been with the regulators, having discussions about products and how we do things and how we can do things better, and fixing things we're doing, and what's going on in the industry and what they should be looking at, and them telling us what we should be looking at. But those are occurrences that happen all the time. And so the dialogue with the regulators is extensive and deep and helpful, quite frankly, for us, and hopefully for them as well. So is that what you meant? I mean, I don't.
No, I think it's basically what I meant. It's also like I would say.
Or you mean more lobbying, like going down and trying to get things.
I actually didn't think of that, but that probably happens as well.
Well, a little bit. I mean, a little bit. You go and they talk about what's important and not important, and.
But lobbying is also informing and educating.
Yes.
I think that's another way of saying lobbying, but it's probably more true that's kind of what happens.
Yeah, it's not always lobbying. It's just explaining what's going on.
Yeah.
And can we do this, or is this a better way to look at it, or what do you think? So yes, I mean, I've never been a lobbyist, of course, but I've done a lot of meetings.
Yeah. So if you had like three things that you wanted to change in the financial system today, what would they be?
Oh, come on.
You can do one. What is like the biggest pain points in finance today?
The biggest pain points in finance today. They're different for different people and different things. So I hate to tell my top three. I do think that the settlement processes for securities and stuff. They're talking a lot about it, T+2, T+1, T+0. That would be, I think, a big deal for that trading type businesses and those kind of things. I don't know if that's the biggest thing in banking today. I think a lot of, and the other thing is the capital rules being coordinated, for lack of a better word. We have a lot of capital rules that kind of, I don't know, a little bit work on cross purposes in a way, and taking a broader look at how they are and how they impact banks, and they impact them the right way or the wrong way, and is there a better way to do it? We're on Basel IV now, and we have all kinds of things, and so there's a way to do that. I think that'd be important. And third, and I do think it's interesting to watch what happens in the ESG space, and what the banks I think just signed something about how we're going to lend to that, and how the Fed's gonna write the rules about how it works and all those kind of things. It's gonna be fascinating what they do and what we do as far as trying to become a bigger lender there, but also to drive behavior through the banking system for people to go into ESG. That's going to be a big opportunity to change the world, because we provide a lot of the private capital that does these things. So I think that's going to be very interesting, and they're working on that right now. So those are my three.
It's good, very good things, I would say.
Didn't say crypto, but whatever.
No, because that's not, I would say that's not a problem, that's a solution, right?
Yeah.
So that's, no, but I do think that, like, I would definitely second that one of the things that's always an opportunity is increase the amount of liquidity. And you do that, like settlement is one of it. As you said, like it's locked up in settlement, and you increase liquidity that way. I would also look at like anything that's in the world today that's not liquid. A lot of things are not liquid, like from houses to a lot of other things. Every time you can change an asset from being illiquid to liquid, you release capital, and that's going to mean a positive change to the world. So it's like these are like important factors.
But I do think the security of a blockchain thing and the speed of the networks is something that can only add a lot. That can add a lot of value to us.
Yeah, it definitely. I say, like, again, and I also felt that the journey you kind of explained from back in the days, it's all about speed at the end of the day. And then what happens in that journey at some point, then speed means people, and people can only cope to a certain extent, and then you need to add automation. And then you need to understand whether that automation actually works and check it and other things, and it creates a new industry, basically. So that's.
I mean, we even have our own version of Siri on our mobile. It's called Erica, Bank America. It's called Erica, and it's amazing how many people use it and how helpful it is. I mean, it's literally Siri on our app. And it's very good, and so we adapt.
That's awesome. Cool. So I would kind of like to round off with around, like, just saying, like, what are the biggest things, like, you would say on the crypto front, and, like, I'm just jumping back into this, the use cases that we should, like, focus on, things that you are interested in there, like, just what are those?
Well, the two things, the payment networks, and what's going to happen on those, and how we use them, either for currencies or crypto, or the combination thereof, and how it works. I think that's what I'm really focused on. But also just the idea that as an asset class and a store of value, and what should individuals have and what can they have. And I know people argue they should have 1% or 2%. That's what they used to say about gold or commodities or anything else like that. And so is it part, it'll be interesting to figure out, is it really a part of a portfolio somebody should have or not? And who should have them? I just took one of my FINRA continuing education tests on what people can own, and they were asking me questions about that in my online FINRA test. What's appropriate for a person to own and not appropriate for them to own, and we really do have a fiduciary responsibility on those kind of things. And so where that goes is determined a lot by the asset itself and how it's supported and what happens around it, and that'll be a big moment when people think fiduciarily that is a good thing to have or not.
Definitely. Have you an understanding in banking work? Like, have you asked your customers today, are they owning crypto as well? Is that a thing?
I'm sure some are.
Some are.
I mean, certainly everybody talks about it.
So everybody talks about it.
Everybody talks about it. But I mean, some do. But we don't hold if they do, we don't hold it.
No, you don't hold it. But it's like, it could be that you're, like, checking out, like, asking around to figure out.
I've heard some people own it. I don't know.
That's good. Cool. I think I'll end it here and just say, like, this was really an amazing insights into your view of the world and the journey there.
Nice. I was watching Dune. Yes. I kept thinking they had to have crypto then, right? I mean, how can Frank Herbert not think of crypto in that world? That's like it's like 10,000 years from now, and there was no crypto in Dune. I mean, how could that? How could Ericus have no crypto? I don't really understand that.
Yeah, they didn't have Bank of
Ponder
America
that for a
either.
minute, Michael.
Yeah. Cool. Thank you so much.
Thank you very much.
This is awesome. Thanks. Thanks.